I feel like we already have clarity in terms of the U.S. regulatory regime for now. Gary Gensler at the SEC seems to want to stop any crypto companies in their tracks and either have them close their businesses down completely or move offshore. How do you think? How do you think it's all playing out?
Well, I think MicroStrategy's view since 2020 has been that the only institutional grade investable asset in the crypto space is Bitcoin. Bitcoin is the universally, globally acknowledged digital commodity in this industry. I think it's pretty clear that the regulators don't see a legitimate path forward for cryptocurrencies like the stable coins, crypto securities like the tokens mentioned. They don't have any love for crypto derivatives. They don't have any love for crypto tokens, and they have a view of crypto exchanges which is far constrained. I mean, their view is crypto exchanges should trade and hold pure digital commodities like Bitcoin. And so the entire industry is kind of destined to be rationalized down to a Bitcoin-focused industry with maybe a half a dozen to a dozen other proof-of-work tokens.
So, Michael, what happens then to the exchanges? In the U.S., at least, it seems, you know, if they're only going to offer trading in Bitcoin or other, clearly pure commodity tokens, that's not going to be a great business model. Do exchanges in the U.S. just go away?
I take a different point of view there. I think there's been a lot of confusion because of the 25,000 other cryptos and because of all of the crypto securities that have been angling to position themselves as the next Bitcoin or a better Bitcoin. So now I think that the public is beginning to realize that Bitcoin is the next Bitcoin. The next logical step is for Bitcoin to 10x from here and then 10x again. So eventually, I have confidence that the crypto exchanges will come around to realizing that Bitcoin really is the dominant asset in this space. And their business models are fine when Bitcoin goes up by a factor of 10. And, we can see that the dominance of Bitcoin in the crypto economy, as measured by coin market cap, has moved from 40 to 48% this year alone. But I think that as the stable coins and the tokens go away, that long-term dominance is headed for 80%. And I think what you got to remember is the reason that we don't have mega institutional money flowing into this space is confusion and anxiety. When that disappears, you're going to see mega amounts of money flow into space, and the business models will be just fine focused on Bitcoin.
Michael, I want to ask what the future of some of these centralized exchanges does look like right now, because to your point that maybe once the confusion clears up, more institutions will come in. When you have a company like Coinbase, obviously there's a big regulatory overhang right now. For normal investors in the space, not the big institutions, do you see them moving away from these sort of centralized exchanges, maybe gravitating more towards cold wallets from here?
Well, I think that there's a massive need for exchanges to help people acquire Bitcoin and custody Bitcoin, especially as the pension funds, the insurance companies, the banks, the institutional investors get into the space. Companies like Grayscale need to have a custodian. So I see a lot of bullish things for Bitcoin on the horizon. I think the accounting treatment, the upcoming halving, the explosion in the hash rate, and also the clarity that has come out of the SEC of late is actually laying the foundation for the next bull run. And there is a place for crypto exchanges to help people buy Bitcoin, sell Bitcoin, custody Bitcoin. And I don't think that's going away. I think that's going to be a great business.
Michael, how does MicroStrategy actually accumulate its Bitcoin, and has that process changed at all?
We use a variety of institutional grade Bitcoin companies. We work with Coinbase, and we have worked with Coinbase. We have a number of institutional grade custodians as well. MicroStrategy has been kind of special in this regard because Unlike, say, an ETF or the like, we're able to access the Bitcoin spot markets and hold Bitcoin, and we're also able to access the equity and the debt markets as we pursue our Bitcoin acquisition strategy.
You've outperformed Bitto and Grayscale and other, exchange traded products year to date. How is your strategy, though, in your company different from one of these, products that just hold large amounts of Bitcoin?
Well, we're an operating company, so we have a profitable software business, and so we can sweep the cash flows of our software business into Bitcoin. Our aim is to allow institutional investors to get Bitcoin exposure, but without charging them a fee and generating a yield when we can. And because we're able to tap the debt markets, we're able to issue debt. We're also able to refinance or pay back our debt, like when we retired our Silvergate loan earlier this year. We're able to issue equity when it's accretive. We're able to purchase Bitcoin with cash flows when it's accretive. So those are our flexibilities you have as an operating company. If you're an SEC 40 company like an ETP or like Grayscale as a trust, you can't really do those things. And I mean, the result is, Bitcoin is up 55% this year to date. MicroStrategy is up 92% this year to date.